Can you give a quick personal introduction and introduction to Posh?
Sure, thanks. So thanks everyone for taking the time here. My name is Karan Kashyap. I'm co-founder and CEO of Posh Technologies. We're a recent MIT spin-off company who spun out last June 2018. Came out of a natural language processing and speech recognition lab. So what we're focused on today is conversational AI, essentially automating routine inquiries in enterprises, especially credit unions and banks, in the after hours and during hour scenarios on both the messaging and voice-based channels.
Great, thank you. Raven?
Hi everybody, I'm Raven Smith. I'm the co-founder and CEO of Jointly. We're all about helping make personal finance more collaborative and the workflow within households of trying to manage your money much easier, less stressful, and fun.
Very cool. So let's start with the customers. And as we're thinking about this next generation customer, who are the next generation users of your products? Raven?
So for us, our products are, who here thinks that money is personal? As society tells us that money is personal, but in reality, money is for exchange, right? And it's something that is collaborative and social in a lot of ways that I think increasingly next generations are finding. And you have people now that are meeting online, developing families and relationships that starts in the digital space. And the future, I think, for us at Jointly is helping people work better together to make better financial decisions, because a lot of the impact of building our financial lives in reality doesn't exist in a vacuum.
Cool. And how about yourself, Karan?
Yeah, so we're really focused on sort of a B2B2C modality in the sense that we work with institutions like credit unions, like banks, to actually equip them with our technology to help them actually serve their membership better. So our end users are actually the members of banks or potential members of banks and credit unions who are looking to get answers to questions much faster and much more streamlined. And so what we really envision is our end users really being anyone who would call in or send an email or send a message to an institution regarding anything from questions about account openings or balances to actually executing workflows and doing RPA processes.
Excellent. So for each of you, why are your customers not being served today in the way that you imagine them, the way that they should be served from an institution?
First?
Yeah, I can start. So I think we're sort of at an interesting point in time where a lot of technologies are coming together to really enable the types of goals that we have at Posh. So from an institutional standpoint, I think the direction of thought has kind of changed a bit. Credit unions have historically always been very member-focused, but with the advent of things like messaging channels, social media, and so forth, the expectations of consumers are really adapting. And it's not just about how it's adapting in terms of banks. I think the desire to change is really being driven by companies like Amazon and Uber and other sort of consumer-oriented businesses that are providing a next generation of service, a next level of engagement that is now becoming sort of the status quo for every organization. In terms of a technology perspective, we're seeing things like AWS really become ripe in the market. We're seeing technologies from companies like Twilio really enabling interaction on channels like SMS and telephone systems without having to have bulky infrastructure. And as well as where we are in terms of Posh's technology is that we came out of a research lab. We have some interesting IP on how to actually make conversations more human-like and actually persist memory in conversations. So I think if you combine the infrastructure, a desire to change from an industry standpoint, as well as the IP that we're bringing to market, I think all of those sort of fit well together, and it sets up timing right. And I think in the past, in terms of how banks and credit unions have looked at things, interactions were typically driven by in-person engagement during fixed hours of the day. Members were usually localized to where branches really were, but today everything's a lot more global, and so you can't necessarily expect that your membership will call in between 9 to 5 or 9 to 7. You might have a lot of people that are traveling all over the world much faster today, and people are expecting a more 24/7 level of engagement.
Awesome.
Sorry, what was the question? I was too busy listening to Karan now.
How are they not being served today?
Right.
Yeah.
So the vast majority of products out there are basically entirely focused on the individual. So everything that you interact with, from products to software, there's a lot of variations, but it doesn't tend to take into account how you interact with another person, how that experience could be shared, but allows you to have the level of fine-grained control you might want. So you have a generation now that wants to be able to share their finances, but maybe not all of it, and maybe not all of it at the same time. They have a lot of different configurations they might have with a partner or a child or a sibling. and they want to be able to manage those different relationships pretty seamlessly. So, the way we started out really had to do with me and my co-founder feeling like there was a real gap in the kinds of tools and products and the experience that you had to be able to work on a financial work stream with a partner or a family member. And so we're all about making the process of doing that and communicating much easier.
So there's been joint accounts to a certain degree, but why haven't banks, in your opinion, built the level of product that you're talking about?
I mean, I think historically it's much easier to deal with an individual. Regulatorily speaking, to identify someone, you need to be able to work through all the hoops on the back end and through regulations to deal with an individual. I don't think some of the tools and software have quite been where they've recently come to be able to enable the kind of front-end innovation that exists. And so it's very hard to provide that kind of product, and there's a risk to the consumer of doing that. But now you've basically gotten to a point where software can obfuscate the back end, so you can make it feel like it's a collaborative experience, even if you have to, on the back end, provide the products and systems that would deal with individuals separately.
Okay, very cool. So Steve earlier mentioned that he's less of a financial services company and a behavioral sciences company. So talk to us about the research that you've conducted on financial behavior and how you're using that to drive your platform and also customer acquisition.
Yeah, so, well, there's so many places to go with that. But a lot of what we've looked at is what motivates, from a behavioral economic standpoint, how do two people interact and how could we improve not only the workflow of being able, while you're on the go, to build a picture of shared spending, to work towards shared goals, to nudge each other to do something. Because historically, most of us don't want to budget. We don't want to do this. It's like the last thing you really want to be doing, except for maybe the 1% of us that sort of get excited to jump into a spreadsheet. I know who you are.
A lot of them work here.
But the rest of us do have to find a way to interact with someone else when it comes to, did you pay the bills? Are the groceries, done? How do we separate these things out? And what we realized in this process is there are two pieces to it. There's an emotional piece and a social piece, and there's also just the core fact of, I have to keep track of some things, I have to communicate with someone else about this, I have to see where our money's going, and all do that in a way that isn't awkward and doesn't kill the romance, so that, on date night, we're not sort of fighting over, who picks up the bill. And in that process, we teamed up with some researchers at Harvard Business School to design what we call the jointly financial personality framework. So it's like a little Myers-Briggs for your financial personality. It's fun to take. We've been kind of looking to test that. We'll be testing that with DCU.
Yep.
But
I'm a meerkat, by the way.
And we have overlaid it with kind of a spirit animal framework. So www.jointly.fi, you can go there, or I can send it out afterwards. You can find out if you're a vivacious penguin, a savvy squirrel, or an ostrich. And really, I laugh, but I think when we talk about money being a taboo subject and it being difficult for people to talk about that, a lot of our research showed that two people really struggle to even start the conversation around how do we talk about money because it's such a loaded subject. And we wanted to provide a way, just like Myers-Briggs does, for someone to disarm that conversation and talk about these results, whether they agreed with them or not. And they, so far, have reported a pretty high level of identification with it. But you can sit down and have a conversation with a partner about, what does it mean to be a meerkat or a penguin, or even to a kid about, this is how mom or dad, took this test and came out, and this is what this means, and it can start a much broader conversation. But what's really cool is that then you can tie that to data and actual spending data and start to sort of see some really interesting things. So for us, the research led to that piece where we started to understand some of the more psychological, personality, and social influences on how people relate to money and each other on the subject.
So if you had to synthesize it down, what's the value in a traditional bank partnering with you to provide a service like this?
Yeah, well, so obviously I think what we're doing provides insight into how not just one person, but two people interact when it comes to money. I know with DCU, it's been a real focus on how do we get members to engage with each other. That's what we're all about. But I think we've found with our app, and I think there was just the earlier conversation with the bank about how often someone interacts with their account. In our kind of initial testing, you have people engaging weekly because they're not just engaging with you, they're engaging with our app and you with each other. And I think that's the key difference, is that when you're finding a way for two people to interact about their finances through your application with each other and you're part of that conversation, it is huge in terms of building loyalty, growing with that relationship, not to mention the data that you get from being a part of that conversation on an aggregate level that helps you think about how you target products, what people need, when they're going to need it, and what they're thinking about.
Awesome. Thank you, Aaron. So, Karan, tell us a little bit about what it takes to launch an AI company, and for perspective of everyone here, where you guys are in deploying Posh technology to banks and credit unions.
Sure, yeah. So, we started the company because we fundamentally saw a gap in where other technologies were in the market. When we in the sense, me and my co-founders were in the research lab at MIT, we were looking at other conversational tools, a couple of years ago. And we noticed that there's a common trend that you might find when you're talking to digital agents or cognitive agents. One thing we noticed was that they typically have a history of not keeping track of context in conversations, so basically persisting memory. And so if you're talking to Siri or Alexa or any of these other bots, you might notice that it doesn't recognize something that you just said because it doesn't actually remember what you said in the past. So we recognize that as a very important aspect of member services, customer service, and so forth. Context understanding is very important for two-way bidirectional conversations. And so the founding of the company was really around us having IP that we created to actually install and bring in this more human-like level of memory persistence in conversations. So we started with banks and credit unions largely because we saw that it was an interesting market fit. We found the DCU Center here, and it naturally kind of brought us into the space of credit unions and banks. Technically, our platform technology is really agnostic to industry. We could have as easily got into like retail or any other vertical, but it just so happened that we're looking at banks and other kind of financial services companies today. But where we are in the journey right now is that we spun the company out about a year ago. It took a pretty big team to get to where we are right now. So we were 3 founders, and in the past year, we're about 15 people today. Most of us are engineers, and we've been developing a good suite of products that we're looking to install with different institutions. So so far, we've partnered with about 10 credit unions. We have funding from those credit unions, so our investors are basically our customers today. So we decided to go that route because we would let our customers largely not only use our technology, but really kind of drive our product vision and roadmap. We wanted to be very focused on this market initially and let our customers really kind of define what we end up building, the tools that we end up building really to match our product market fit down the road and allow us to set a direction that would be largely applicable to other institutions that are similar. And we have a couple of products that we're really focusing on today, and of course those will probably evolve over time. So one of the main channels that we're looking at is the telephone channel. So historically, if you wanted to call customer service or contact customer service, it was largely done over the telephone. And so, we think that there's going to be a shift. First of all, we think that there's going to be a shift towards things like messaging, whether it's mobile messaging, web messaging, or things like smart home speakers, Alexa, Google Home. But that's probably not going to happen, overnight or even in the next couple of years potentially. A lot of people are still ingrained to calling in and sending emails, and so we wanted to basically provide service across channels that people use today as well as the channels that people will use in the future. And so we're deployed right now with credit unions and banks on both the telephone-based channel. So basically, if you call into our customer's call center or try to use a telephone-based product, you speak to our AI and not a human. Another aspect is still on the messaging side too. So if it's after hours, especially when there's no reps available, and you have a question that you want to ask, there's a good chance that our bot's actually going to be able to answer that question successfully. And even if we can't answer that question right away, it's still useful enough for us to know that that question was asked, to kind of categorize the urgency of that question in terms of, is this a simple inquiry that's not so crucial, or is this someone who has a fire in their account and needs to be handled really quickly? And so, based on how we can kind of gauge the urgency of the request, we can also prioritize it such that when the reps are back, in the call center, we can kind of tackle those based on what matters most to keeping everyone happy and especially keeping the bank's liabilities down.
Cool. So right off the bat, you're delivering core value to a traditional bank by enhancing customer service while reducing the cost to serve those members. So impactful now, but what's the future state of AI? So we hear a lot about chatbots, overrated, underrated, and what are we going to see around the corner as it relates to conversational AI?
Yeah, I mean, I can understand why people don't like bots today. It's not that difficult to kind of understand why if you've used bots for the past few years. So our goal is to really play a role in shifting that ideology, right? So we think that a big part of why people haven't liked bots is because they're not very human-like. And so one of our biggest goals is to really focus on making bots more human-like. Context understanding is probably just one piece of that, and we're going to continue working on getting to that end goal over time. But from an overall kind of business value standpoint in terms of our roadmap and what we're trying to work on, our goal is to basically pull on both levers, like you mentioned about saving costs on the business side as well as improving the experience on the consumer side or the member side. And so in terms of what we're going to be developing, I mean, I think right now we're able to completely replace a telephone banking product within banks and credit unions today to be kind of go away from that dial tone menu, pressing buttons on an IVR menu, to completely being voice driven. And we have those products in production today. But our goal is to continue to expand on that, right? So getting from maybe 50 or 60 workflows that we can do with our platform today that we're comfortable with that's in production, to maybe 5-6 times that, so that you're not only using our technology for a certain number of member services tasks, but really anytime you call your bank or message your bank about anything, you would hit our AI first. So really trying to maximize the value of what we can automate, allowing the reps to actually handle some of the more sensitive or hard things that really couldn't be done potentially with with an AI. Eventually, I think everything will be done with an AI, right? I think that's going to happen. I don't know how long it's going to take, but I think that's going to happen. But at least trying to get to that point where we can deliver as much value as possible, such that reps, members, and dollars are being utilized more effectively.
So maybe we can finish up with a quick minute from each of you about what does it take, and if you could share your experiences of launching your product with a bank, right? What's the good, the bad, the ugly, and what have you learned about that?
Go first.
Launching with a bank?
Yeah. So as you imagine launching with a bank,
Yeah.
right? How do you view that process?
I think longer than I would like it to be. It would be my first. I mean, obviously, as a startup, the push is always to move fast, break things. In the banking sector, you don't want to break things. But I think the process of trying to go through a lot of the structures and systems that are set up for a reason also means that there's kind of more hoops we have to jump through and more things we have to be aware of to be able to set that process up. And so before we're really ready to, and we've kind of the time it takes to get to ready to launch is happening, we've got to find other ways in the meantime to keep pushing forward and test before we do that. So yeah. I would also just say before Karan goes that to give him a plug, probably not going to get to hear his product today as a demo, but I have, and it's pretty awesome. If I wasn't doing my own startup, I'd be trying to tag on with him at some point, because I don't think it's hard to, it doesn't quite do justice what they're doing, and I think it's amazing, so you should check it out.
Cool. Thanks. Thank you. And Karan, how about yourself? What have you learned now in implementing with banks?
Yeah, I mean, it's been a real roller coaster of a journey in many ways. We are fundamentally designed to move quickly. Coming out of a research lab with the technology, we're trying to go as fast as possible. And we're in an industry where I think typically that's kind of the opposite. There's a lot of regulation, security concerns, and other kind of hoops that we have to get through. So it's been a learning experience for us, really, to better understand sales cycles and expectations of getting into B2B sales, especially within financial services. But the experience overall has been pretty awesome. I mean, we have gone live with our customers. Their feedback on our technology has just been awesome. We couldn't have been happier with how they've reacted to our technology. We're really excited to see the members continually getting their benefit from our technology, actually seeing people use it successfully. It's really, really gratifying to us as as the founders of the company. But I think from the lessons that we've learned so far, it takes a while to get data from banks. Because we're an AI company, we are pretty dependent on data to actually train our models. Fortunately, like I mentioned, we have investors that are our customers. So we have our funding so far raised from largely from credit union investors who are also our customers. And so it's been a little bit easier to work with them because they're sort of financially aligned with us as well in our success. It's been easier to kind of get data from them. There's kind of incentive alignments in that strategy there. But that process has still been long. I mean, it took us a while to get the data that we needed to actually build our models and get going. But having gone through all of that, I can kind of appreciate that it could serve as potentially a barrier to other companies coming into. So there's kind of a give and take, as if you're willing to kind of stick it out and fight through all the hurdles to get there, then it's pretty nice to see the end result, but also that everyone else kind of has to go through the same thing too. And from a business standpoint, it could be favorable to think about that as well. So it's been a lesson overall. There's still a long way to go. A lot of things we're learning about new use cases. Every single bank has their own policies, and even if we did something in like 6 weeks with one bank, it doesn't necessarily mean that it's going to take exactly 6 weeks with another. Everyone is kind of different. But from a holistic standpoint, it's a big market, and I think there's a lot more learning and growing to be done.
Awesome, thanks. So why don't we hand it over to the audience? There's a couple questions.
So it is said that data is a source of AI, right? Without the data, there is no AI. In light of that, if you have some challenges getting this live, real-time feedback data from financial institutions, why aren't you looking into healthcare, where you can have bots to interact patient information, or maybe where data is more available in like retail, maybe retail finance, where you can actually leverage consumers' shopping behavior in real time, which is less regulated, and leverage your AI technology, NLP technology to enable them make better purchases and things like that. So that's my question for you. Obviously, coming out of MIT is a significant advantage, and I'm sure your technology is good. I'm just curious why you focused on finance and not healthcare and retail to exploit this great NLP technology.
Yeah, it just kind of happened, honestly. It was kind of interesting in the sense that when we started out of MIT, we were kind of open to different opportunities and different verticals. Obviously, being in Boston and having the DCU FinTech Center right here was very fortuitous. We didn't know anything about credit unions besides the fact that I was a member of MIT FCU. But besides that, I had no idea what it really was. So, coming across the DCU FinTech Center, we had another customer out in DC, another credit union that we happened to also get in touch with around the same time as the time we joined the center. We're both kind of very fortuitous things that happen, and speaking with Jim, DCU CEO, getting buy-in from DCU to actually use our product and commit to working with us. A lot of things just kind of happened as a result of that. So now looking back, now we have a bunch of customers in the industry. We have the data from a bunch of customers. I meant to say that it was hard to get there, but now that we're there, it's actually much easier to scale.
Great. All right. Thank you very much. Appreciate it.
All right. Thank you.